$70 billion in corporate value gone. Yes, that's really happened. Roblox has lost almost 3/4 of its value since the autumn. It's kinda crazy, and you know what? It couldn't be happening to a better company, right? The biggest platform in gaming, one built in the labor of children, funded by their pocket money, a place where the dangers kids face are what the CEO calls a, and I quote, opportunity. So, no, don't shed any tears, but do pay attention, and that's because Roblox are not being punished for any of those things that a lot of us find them distasteful for. Oh no, they're being punished for cleaning up their act. You see, they were dragged into doing the right thing, probably against their will, and unsurprisingly, the investors goddamn hate it. So, what just happened? Well, Roblox missed their second quarter targets, and the market delivered them the worst day in their corporate history, with 1/4 of their value gone in just a single session of trading. $10 billion. But the details around this are actually quite odd. You see, their sales grew 8%, right? So they're getting more money in, but 8% is their slowest growth for that metric since 2022, and the player numbers actually look even worse. Daily players spiked at 152 million last year. Now they're at 123 million. What about monthly paying users? Well, they're down 10 million to 27 million. Pretty big drop. And for the first time ever, Roblox told investors that their sales will shrink next quarter, and then they pulled their yearly guidance completely. This is insane. And with the yearly guidance pulled, well, it seems they can't say where they're going. Here's Morningstar's verdict. Quote, results were atrocious. And they were. But the biggest reason why was actually that Roblox was made to curb its worst tendencies. Make no mistake, not out of the goodness of their heart, but instead because governments are trying to wise up to a lot of online harms. And those impact Roblox. Effectively, we can boil Roblox's problems down to two things. Fewer players and then less money from each of those players. And in both cases, this was basically the price for their cleanup. Why fewer players? Well, the big reason is actually friction. Under the weight of lawsuits and new laws in the United Kingdom and Australia, Roblox rolled out age verification. Globally, 57% of users have been through it. Australia is at 80%, the US and UK are at 70%. Now, you may be wondering, okay, does the age verification stuff even work? Australia's very own commissioner suggests that it doesn't. But to be fair, the ID checks aren't the whole story. Another reason driving those player numbers being a bit lower is they've had no big breakout hit. Last year, Grow a Garden was a thing, and it had 22 million accounts playing it at once. This year has had games pop off, many Mecha Chameleon clones, but nothing close to that level of success. That means fewer cultural moments pulling kids past the sign-up screen. But partially, a bit of that is by design, as it turns out. In their earnings call, they explained their financials have been directly hurt by changes they made to game discovery. You basically know what a Roblox game tends to be, right? We kind of talked about it recently with the Mecha Chameleon clones that were spun up super fast and just stuffed full of quick fix Robux spending. They were pretty shit. Certainly shit compared to the original. The sort of thing where, if you'll permit me to do a biblical reference, things like that are kind of like, building your house on a foundation of sand. It's not really long-term sustainable, is it? It seems that they actually know that, and they now say that they're pushing a lower frequency of impressions for games that are built on short-term monetization, and they're instead favoring long-term retention instead. And internally, their data suggests this is working. They say that players are moving to, it's a bit of a funny quote, but here it is, evergreen-type games. The exact opposite of what might be called, not that we're saying we had it, but more clickbaity or kind of cash-grabby type games. It's implicit in what they said that loads of their stuff was just cash-grabby slop. But hey, better games, better monetization, and protected kids. Noble goals for the long term, but clearly not what the investors want. They want constant growth all the time, and no one has yet shown them a Roblox that is both better and bigger. It needs to be both, and that means that until someone does, the awful version is the one that they will pay for. But unfortunately for them, the pressure to change is very much still building. Let's kick things off with the regulators. An EU Commission spokesperson told Games Market that Roblox will very likely soon be designated as a very large online platform. Yes, a VLOP. Now, that's the same bucket as Facebook, TikTok, and YouTube. It's the first gaming platform, not a store, that has ever been classified that way, and that actually does mean quite a lot, because it means reviewing the entire business against EU rules on user rights and child protection. It involves handing Brussels their compliance plans and fixing whatever Brussels says isn't good enough, because oh boy, in Brussels, they really do love a good old compliance plan. Now, Roblox, for their part, says that they welcome the opportunity to engage constructively. I'm sure they do, but compliance is expensive, and compliance could make it harder for them to monetize. And this is actually all the more troublesome for them because Roblox is actually already mid-rebuild. That whole crackdown and cash grabs that I mentioned earlier is just one piece of a bigger bet, and that bet is broad, lasting experiences instead of flash-in-the-pan viral hits. There's a quote from their investor call. 3 years ago, our top 10 games accounted for about 30% of all hours engaged in Roblox. Today, it's approximately 20%. Now, our core takeaway from that is basically that it took 3 years for them to move 10% of playtime from the top bunch of games across to the rest of the platform. That's genuinely healthier, but in a world where their growth is slowing, it's completely unsellable. Hence, all of the investors selling off and trying to offload their Roblox assets. Now, you could say a bunch of that is them prioritizing the middle to long term instead of the short term. And they probably know that content that has the same, whiff of a get-rich-quick scheme is not really a sustainable thing. So you could say, oh, this is very virtuous of them. But it's mostly not virtue, I would say. A lot of it is actually the economy. As an example, Wedbush's analyst told Reuters that for under 13s, parents are simply less willing to hand over highly discretionary dollars right now. $10 for Robux used to be a fairly easy yes, but now for a lot of people it's food money. But it goes deeper than that because their audience is aging, right? Adults are now almost a third of Roblox US daily players. So the kids grew up, and an adult who is spending their own money is a far harder sell than a kid spending their mum's money, as an example. So if you stack it all up, you get a fairly clear picture. Roblox is the weakest it has been for years, and every attempt to make it better is making it weaker, at least in the eyes of investors. And aren't they the people who really matter in this equation? Now we've reached the bit where all that market stuff actually starts to impact, well, games and us as people who like to play them. Roblox's leadership here is getting a very, very clear signal. And that signal is, you're doing the wrong thing. Tens of billions of dollars worth of wrong. And it's not like they haven't tried to keep their investors happy. Oh, they have tried. As of July, they're testing Roblox Build, which is their Gen AI game-making tool. It's currently got a bit of a soft launch in New Zealand. They've also showed off Memories, a social feed with live broadcasts baked into it, which is a little weird as a feature that I guess is going to be sitting a little awkwardly beside the anti-clickbait agenda that they've also talked about, but all these things are things that we just hint to investors to make them happy and really help them to imagine future growth that we truly do plan to deliver. Well, in this case wrong. None of that narrative stuff could do anything. The raw numbers just did not work for investors. And that means that the choices Roblox made this year didn't produce the right kind of growth. And for a public company at this scale, that growth is the only thing that matters. Because investors never bought Roblox as a games company. They bought it as a tech platform. That is the itch that Build and Memories are scratching. And we have seen this trend in the last while. We take one thing that is what it is, but then we sort of pivot it and we try to sell it as no, it's a tech company. It's happened a lot. It's happened here. But the problem is, when you're trying to sell yourself as a high growth tech stock, well, what happens when that growth slows down? Obviously, this happens. You lose a lot of your value. But of course, a lot of that stuff means nothing to the average player. It only really means something to investors. And that takes us beyond Roblox itself, to the real story going on. The best thing for players isn't always the best thing for investors. We say some version of that a lot in this channel, but we've rarely seen it this nakedly. Roblox was never going to become good overnight. Remember, of course, what the company is built on. The labor of kids and their pocket money. You don't unwind that in a quarter. It still is a hellhole of slop, but it is also the platform that functionally is gaming for millions of people. And while it has made some improvements, it's obvious it was dragged into those by external threats and forces. And that they've been punished for that is actually important, because the lesson that the market just taught to Roblox and to everyone watching is jump or be pushed into doing slightly better stuff it doesn't really matter. If doing the right thing costs growth, then for a publicly traded company, it can simply never be the right choice. And if I'm to end this on a personal note, a trend I've noticed is, back in the day when it really was the free open internet, you're just going to sites, it was great, all connected. What's kind of happening more and more these days is we're sort of moving on to isolated intranets. In a case like this, it could mean that a Fortnite and all the games within it, or a Roblox and all the games within it, functionally are the entire category of gaming for loads and loads and loads of people. And the worrying thing is the more that those platforms capture those people and become gaming overall for those people, well, the less of them kind of end up in other places. Perhaps on Steam. And where I think it's even worse is what it actually does on the economical side. Because the platform splits experienced on Roblox, they are so much worse than in loads of other places. And what it effectively means is that the huge corporate entity that has done its big platform, that of course will be a lovely closed off walled garden, capture the attention, they kind of lock people in, sunk cost fallacy, all that stuff, and they command a far larger cut of the economic activity within that platform, which I guess ultimately means it's just a way of siphoning more of the games economy away from game studios and all of that stuff into a big corporation, which sucks for games, because it sure ain't the case that money that goes to Roblox ends up in the hands of game developers to make more games or something. No, it just ends up in their hands where they will deploy it to weaponize their platform further, which is almost certainly not good for the overall health and diversity of what games can be. So rather than end on that rather cheery note, there is another platform that we do need to talk about. It is Steam. You may be worried about torrents of AI slop hitting Steam. Turns out that story's way more interesting than most people think. Steam is more interesting than most think, and you can learn all about it in the next video.